Are you dreaming of launching your own business, but wondering if your credit score is strong enough to turn that dream into a reality, especially when considering platforms like Lendio? It's a common question, and frankly, a crucial one. Many aspiring entrepreneurs hit a wall when they realize that funding, the very lifeblood of a new venture, often hinges on something as seemingly abstract as a 3-digit number. We've all heard the whispers. You need perfect credit, or no bank will touch you with anything less than an 800 FICO. But is that truly the case? And what about online marketplaces like Lendio, which promise to connect you with a multitude of lenders? Do they offer a more lenient path? Or are their gates guarded by the same high credit score requirements as traditional banks? So, let's break down the general credit score landscape you'll encounter on Lendio, categorized by common loan types. First, let's talk about the absolute minimums. If your credit history is less than stellar, don't despair immediately. For some of the more accessible funding options, you might find paths available with personal credit score as low as 500 to 520. This range typically applies to options like merchant cash advances, MCAs, and equipment financing. A merchant cash advance isn't technically a loan. It's an advance on your future sales. Repay by taking a percentage of your daily credit card transactions. Because repayment is tied to your sales volume, the lender's risk is mitigated, making it more accessible to businesses with lower credit scores. If you have a personal credit score around 500 and consistent daily credit card sales, an MCA could be an option. However, it's crucial to understand that MCAs often come with higher effective interest rates, sometimes expressed as a factor rate, and daily or weekly repayment schedules. Equipment financing is another avenue for those with less than perfect credit, with minimums often starting around 520. Here, the equipment you're purchasing, think machinery, vehicles, specialized tools, acts as collateral for the loan. This reduces a lender's risk, as they can repossess the asset if you default. This makes it easier to qualify, even with a lower credit score. Now, let's move up a notch. For more conventional loan products, like a business line of credit or a short-term loan, you're generally looking at a personal credit score of 600 or higher. A business line of credit provides flexible access to funds up to a certain limit, which you can draw upon as needed and repay, much like a credit card. This is excellent for managing cash flow fluctuations, unexpected expenses, or seizing opportunities. Because it's a revolving line of credit, lenders prefer to see a decent track record of financial responsibility, hence the slightly higher credit score requirement. With Lendio, many of their partners for lines of credit look for at least 600 plus. Short-term loans are typically repaid over a period of 6 to 18 months and are often used for immediate capital needs or to bridge gaps in cash flow. The shorter repayment period means quicker repayment for the lender, which can make them more amenable to borrowers with scores in the 600 plus range. For term loans, which are more traditional installment loans with a fixed repayment schedule over a longer period, often 1 to 5 years, sometimes longer. The minimum personal credit score generally starts around 600, but score closer to 650 to 680 will unlock more competitive rates and terms. These loans are suitable for larger investments, such as business expansion, purchasing real estate, or significant equipment upgrades where the asset isn't directly collateralized in the loan. Then we have SBA loans, or Small Business Administration loans. These are government-backed loans that offer some of the most favorable terms, including lower interest rates and longer repayment periods. However, because they are so advantageous, they also have stricter eligibility criteria. While the SBA doesn't directly lend money, they guarantee a portion of the loan, which reduces risk for participating lenders. For SBA loans through Lendio's network, you'll typically need a personal credit score of 615 to 650 or higher. Some lenders may even prefer scores in the high 600s or 700s, especially for the most desirable SBA 7A loans. Beyond credit score, SBA loans also have rigorous requirements regarding time in business, annual revenue, and a solid business plan. It's also important to understand that your personal credit score is often the primary factor, especially for newer businesses. If your business is relatively young and hasn't had time to establish its own business credit profile, lenders will heavily scrutinize your personal credit. This means your FICO score, built on your personal financial history, will be paramount. What about business credit? If you've been in business for some time, typically at least 2 years, lenders will also start looking at your business credit score. This is a separate score for your company, reflecting its payment history, credit utilization, and other financial data. A strong business credit score can significantly improve your chances of approval and secure better terms, even if your personal credit isn't perfect. Lendio provides resources to help you understand and even build your business credit, which is a smart long-term strategy for any entrepreneur. Beyond just a raw credit score, Lendio's lending partners also consider several other factors when evaluating your application. Time in business, annual revenue, monthly revenue/cash flow, industry, collateral or personal guarantee, debt-to-income ratio, bank statements. The beauty of Lendio is its simplified application process. Instead of filling out multiple applications for various lenders, you complete one universal application on their platform. Lendio then uses your information to match you with lenders in their network whose criteria you meet. This saves an enormous amount of time and effort, and it significantly increases your chances of finding a suitable loan, even if your credit isn't perfect. They effectively do the legwork of finding lenders who are willing to work with your specific financial profile. So, to reiterate, while there isn't a single universal Lendio credit score, the platform offers options for a wide spectrum of credit profiles. If you have a personal credit score in the 500s, you might qualify for a merchant cash advance or equipment financing. If your score is 600 or above, more traditional options like lines of credit and short-term loans become available. And if you're in the mid-600s or higher, SBA loans and more favorable term loan options are within reach. The best advice is always to understand your current credit standing before you apply. You can get your personal credit score for free from various sources. If your score is lower than you'd like, consider taking steps to improve it, such as paying down existing debts, making all payments on time, and reducing your credit utilization. Even a small improvement can open up more doors and better terms. Ultimately, Lendio's value lies in its ability to connect you with diverse lending solutions, making business funding more accessible to entrepreneurs at various stages of their journey and with varying credit histories. Don't let perceived credit limitations deter you from exploring your options. The right funding partner might be just a few clicks away. With that said, thanks for watching, and until next time.